Hi traders, it's Roberto, and just want to make one announcement. The trade room will be closed today, all day Tuesday, and maybe I'll be able to open up tomorrow. I'm fighting off a flu, and I need to get some rest. So in the meantime, what I'll do is that I'll send some tutorials, and I'll also send the signals accompanied with a video. The chart that you're seeing right now, this is a heiken ashi candlestick patterns with stochastics indicator, and I'm using stochastics indicator 14, 7, and 3, exponential moving average, and heiken ashi candle. On these stochastics, very simple. I change it to EMA from SMA, and it's a 14, 7, and 3. And I'm looking at a 1 hour chart. I'm just going to give you a short tutorial on how to use heiken ashi with stochastics indicator. The first thing I look for is extremely overbought and oversold conditions, and the stochastics indicator will help me if stochastics indicator is up around 80, that I start looking for a color change in heiken ashi. And here is a good trade setup. Before I decide to take a trade, I count the number of pips before the market turned red. And market went up about 209 pips prior to the color change candle. So that will give me enough room to sell, because if the market's consolidating and let's say stochastics overbought or oversold, it's difficult to take a trade because you don't know if the market's going to break out to the upside or downside. But if prior to the market, to the heiken ashi candles turning color from blue to red, the market pretty much has done its daily range, then I'm pretty safe. I know that market, if it's done it already 200 pips, and it most likely is going to retrace. And in this case it did. The second thing I look for is a heiken ashi candle that looks sort of like a doji. You notice this candle right here. We have a wick to the top and a wick to the bottom. That's a good indication of a reversal. We're going to show you, I'll show you a few of those. And there it was. Stochastics was overbought. The two lines on stochastics are crossing to the downside. The slow and fast moving averages lines are crossing to the downside, and that's my trade. I know it's overbought, or at least it's done its daily range of 200 pips, and it's ready to retrace. Now it retraces, and what happens? It turns around and goes down another 200 pips. Now here it exceeded its daily range, 405 pips. Stochastics indicator is oversold. Then I look for a color change on a heiken ashi candle, and there it is right there. And I enter a trade usually when this candle closes. When this blue candle, this bullish candle closes, then that's my trigger to enter a trade. I know stochastics is oversold. I know the market's already put in over 400 pips, exceeded its daily range, so I take a trade right there. Then what happens? Market turns around and goes north, right? We're in an uptrend now, and I'm counting the number of pips, and there it is, 247 pips, and the market's overbought. So I'm actually waiting for this candle to close, this heiken ashi candle to close. It's already put in its daily range, 257 pips. Stochastics is overbought on the 1 hour chart. So I'm waiting for this candle to close so I can take a trade. There are times when it's difficult to take a trade. This one here worked out, but notice the market is rather consolidating. There's no clear direction until the next day. And it would have been difficult for me to take this trade going south, because didn't have, the market was still in an uptrend. So I probably would have not taken that first move to the downside, even though the market had put in 200 pips. But the second one, this would have been a better trade because the market would not penetrate the swing high. Notice that there is a resistance level that spanned 2 days. So then yes, and I'm looking at price is continuing to change colors at this level of resistance. That would have been a great entry. And 80 somewhat pips, 89, 90 pips, notice the price shot up again to that same level. However, stochastics not overbought. So I would have most likely taken the trade when stochastics was overbought here or here, and the two lines on stochastics crossed to the downside. Now this trade here was easier to take because the market obviously had put in its daily range. It's shut down 205 pips. Stochastics are oversold, and we have a change in color. On heiken ashi, I wait for this one candle to finish, and then I enter the next candle. Remember, just using stochastics indicator helping you determine whether the markets are oversold or overbought on a 1 hour chart, and then waiting for a color change on heiken ashi will help you enter a trade, find entry levels. Here again, the market had, this is a whole day of activity. If you look at these perforated vertical lines represent 24-hour sessions. So from this swing low to this swing high, that was approximately, excuse me, I'm trying to get this cursor to work. Okay, so from the swing low to the swing high was 326 pips, exceeded its daily range. That's the first thing I look for. Then I look to see if stochastics indicator is overbought, and if the two lines are crossing to the downside. Let me just make this thicker so you can notice, you'll notice that the trigger is when these two lines cross to the downside and stochastics indicator is up around this 80 level, which is overbought. Then I need for a candle to close red, and there it is. This candle closed red. My entry is the second candle, and market went down about 163 pips. Then notice that stochastics is oversold, and that would have been your exit. Okay. So the ideal trade setups is when stochastics is extremely overbought or oversold, either at 80 or 20. The lines start to cross to the downside or the upside, and you get a color change candle on heiken ashi. Again, here's another trade setup. We have a huge rundown of 370 pips. Stochastics is oversold down at the 20 level and starting to cross to the upside, and we get a color change candle right there. Again, notice we spoke about a candle that has a wick to the top and a wick to the bottom. That's considered a reversal candle, and then we would take a trade on the next candle right there. I know in hindsight this looks very easy, and because at the time that you enter a trade, you've seen these candles go up and down, maybe turn red, but stochastics is oversold, and we have a color change candle, and it is a candle that represents reversal right here. You have a wick to the top, a wick to the bottom on heiken ashi. Don't confuse this with regular candlestick patterns or regular candlesticks. It's simply, let me just make it just a little bit bigger so you can see. Okay, we've got the market has sold off, pretty much oversold, stochastics oversold down at 20. We have this heiken ashi candle with one wick to the top, one wick to the bottom, indicating a reversal, and we take a trade on the next candle. Here is another situation, the same thing, where we have a candle with a wick to the top and a wick to the bottom. That represents a reversal. Stochastics indicator is oversold. The market had pretty much put in its daily range. Not quite, but it's hitting a previous support level at 178 pips. This candle represents a reversal. We wait for a color change candle, and it happened. This candle turned bullish. Stochastics oversold. We take a trade. Market went up approximately 200 pips. So to recap, we have stochastics indicator 14, 7, and 3, and I use EMA indicator. Heiken ashi candles. Look for a doji type heiken ashi candle for reversals, and that's a doji type candle right here. A wick to the bottom, a wick to the top. Stochastics oversold. A change in color, bullish color, and there's your trade. Okay. Here's one more. Market was overbought. Stochastics is up close to 80. And we have this doji type. We have actually several, 1, 2, 3. And then the market turned bearish. And this is the first red candle. And you would enter your trade on the next candle. And there's your trade. You have to have patience because this was during the Asian session, and look how long it took for the market to turn around, about 4 hours. Okay, so here at 194.20 area, and it went all the way down to 192.70. So, you know, a little bit more than 100 pips. That was a good trade setup. So that concludes our tutorial. Again, I feel horrible. I'm sorry that I cannot open the trade room, but this is a flu that's coming on and I need some rest. I will be sending charts analysis with signals in the next 2 days, and hope to see you guys soon. Have a good week.